You said that India, what's happening here in India, because the institutional framework is here, can be replicated across other countries as well. But some would argue and say that even in a sector like roads, where we're starting to see some fairly good success, it's mostly been hit and trial in a way. I mean, for example, we had toll roads, then we went to annuity projects. Now we have something called hybrid annuity, right? I mean, so, you know, it's stumble, pick yourself up, try something else, try something new. Is AIIB kind of also looking at frameworks or models which, I mean, with, you've got experience around the world that can be brought here in India?
There are many successful stories of, for instance, road projects, roads, expressway, normal roads, or railways, rapid rail or normal rail. There are so many successful cases. China is the case in point, and some other Asian countries are doing very well. I think when we work in India in this sector, we certainly try to incorporate the experience of the other countries, also the experience of your country. But what is most important, to apply the different countries' experience in the context, in the local context. That can only work when you understand the local situations, right? But in this regard, with regard to the transport sector, there are a couple of things we need to keep in mind. First of all, the very good policy consistency. Regulatory policies are important. For instance, one big issue is pricing, user charges, right? China was successful because China dealt with the pricing issue of the utilities and roads very early on. The government had the guts to deal with this. So any project must be done on the basis of the understanding that it must be cost recovery with marginal or moderate returns. So people had to cope with the higher tariffs, water tariff, power tariff. But eventually people are not benefiting from the network of the transport sector or elsewhere. So I think when it comes to the projects in your country or in another country, I think people should accept the cost recovery concept, and the government must be supportive of the very good regulatory system. And then people would come to understand how important it is to have a very good sector policy. And people would understand, eventually would help you over long term.
Sure. The loans that you give out, I mean, are these mostly to state government projects, etc.? I mean,
not necessarily.
These are private.
We're also doing private sector operations.
Private sector operations.
Yes.
As well. But majority would be, because these are long gestation
At this stage, the majority are for the public sector and with sovereign guarantee. But we are pushing for the private sector operations and building up the private sector's assets. You know, this is very much important. First of all, it's not going to add up to the pressure of the public debt of any borrower. We're not going to put pressure on the balance sheets of any government. And when we work with the private sector, we can mobilize more domestic savings, resources, to promote economic growth. And of course, without sovereign guarantee, the operational team of our bank must be very, very prudent to make judgments on the merit. Yeah, of course. And but you see, I think we are doing very well in your country, and I believe as we move on, we can do more in many other countries, so that at least, you know, from the regional perspective, India and your neighbors, South Asia, Southeast Asia, Central Asia, all these countries will understand how important it is to improve the connectivity. Because when the project benefits not only the locals, but also benefit the people outside, you know, the spillover effect would be enormous.
Sure.
And you can get more out of the financing.
Is AIIB going to bid for some of the stress projects as well? I mean, there are lots of these projects which are NPAs, but these are...
this is not what we do.
Okay.
This is not what we do.
Okay.
We invest in greenfield, brownfield, and expansion, but we will not be, for instance, you know, putting money in a company which is in distress This is not at least
Sure.
the
So, you know, just there is this idea here in India, I mean, because there is such a big stock of stressed loans with public sector banks, that why not create, I mean, it's been tried in the US, for example, a bad bank, a big asset reconstruction company, where you can warehouse all these bad loans, and then, you know, the public sector banks are free to, they're unencumbered to go on. Is it a good idea? I just want to.
This is something which is being done by some of the countries, by some of the investors. I think at least this is an option for some of the potential investors to contribute to the financial stability, to improve the performance of some companies, which in my view is a very viable approach. But given our mandate,
not from AIIB, but
I think that's one of the approaches to solve some of these issues. This is also, I think it's more or less like an asset management company, which take the NPLs from the existing commercial banks, and then they do try to work this out. Some of the NPLs are actually very good assets, except that the company is momentarily short of financing,
cash and funds. Fair enough. Okay. So you think it's a good idea?
That's right. That's right.
It can. Okay,
but the issue is how you do that. You know, it's very important.
Sure. The other issue, coming back to what you do, is I mean, there's this big risk of exchange. I mean, the exchange rate risk essentially. How do you? I mean, is there a framework that you have worked at, I mean, to hedge the foreign currency risk? And because these are long gestation, 20-25-year-old loans. Rates of interest are very attractive, but as we've seen with emerging market currencies recently, I mean, the currency goes for a toss and suddenly, you know, you can't service the loan. Is there a way out of that?
You know, probably you're referring to an option of lending in local currencies, whether it's in dollars
or hedge with the local central bank.
Whether we make loans in dollars or in local currencies. It's always an issue of how to hedge, you know, against the currency depreciation or whatever. It's always an issue of how do you manage the exchange risks. So far as the bank is concerned, early on we make loans only in the United States dollars, but we are also trying to build up our capacity. As we move forward, it is possible for us to make loans in the local currency.
Okay.
But it's a challenge also, you know, for the bank to handle this, you know.
But so far it's all only USD.
I mean, so far, yeah. We are building up the treasury capacity, and in response to the need of the countries, we will look at this issue.
Just finally, if you can talk a little bit about the capital that AIIB has to lend. I mean, what's the watch list really at this point in time? You know, what's the commitment from member countries? What will it grow to over the next couple of years? Just give us some idea.
Well, you see, we have the $100 billion registered capital, which is paid to us in 5 years' time, in 5 installments. And starting from 2016, you know, very quickly we will have all the paid-in capital. And for this bank, it is very important for us to manage the equity capital well, so that they will grow in value to serve as the financial basis of this institution, you see. And the shareholders are very, very supportive. And I think, you know, it's not easy for these countries to join bank with 20% of the paid-in capital, which is the highest for any MDBs. But this demonstrates the commitment of all those all those shareholders that we need to support this bank in its efforts to ramp up the infrastructure investment in the member countries. And I do hope India would be a role model in terms of the relationship with the bank, in terms of the effective use of the resources from all these shareholders.
While you have this commitment, sir, some would say that the fiscal situation with lots of these emerging countries, which are part of the organization, is not looking all that great. The role of the state, and many would say the state has to take the lead in infrastructure financing, but they may not be able to. So how are you so confident that they will sort of come through with the commitments?
You see, the fiscal space varies from country to country. Some of the countries are doing pretty well, particularly, for instance, some of the Southeast Asian countries, which went through the devastating 1997-1998 financial crisis, have been learning to do better, and the fiscal policies have improved substantially. So as I look at it, quite a number of middle-income countries, emerging market economies, are not doing so badly as they were perceived to be. So I think there's a sufficient fiscal space, but more importantly, so far as we are concerned, we finance infrastructure projects which could generate incomes for those countries. Okay, can promote export, generating foreign exchange through export. Secondly, we finance private sector operations which will not add up to the pressure of the public debt. So it's not an issue of whether the country is good or bad in its existing fiscal or monetary situation. The important thing is what we do today together could help the country strengthen their fiscal position and help this country promote export, generating more income. That's the crucial issue. Our job is to help these countries to strengthen their national economy, not to create debt sustainability problems. So that is our job.
President Jin, thank you very much for your time, sir.
Thank you. Thank you so much.
Thank you very much.
Thank you.